Hi, William and Elizabeth Darcy. It's nice to see you both again. Thank you so much for coming in today. I know that we've been working closely together the past few weeks, and I just wanted to thank you for all of the information you've provided me with. This has really enabled me to develop recommendations for you to help you meet your current and future financial goals. So let's go ahead and get started. The first thing I want to talk about is your retirement goals, and I'm just going to reiterate the information that you've given me about your retirement goals, and then also talk about the numbers involved in it. And I just want to let you know to write it down, stop me, let me know if anything sounds incorrect as I'm reiterating what we've discussed in the past, because this is where my recommendations are going to flow from, so I want it to be as accurate as possible. So if anything has changed in your situation, please let me know that as well. So for your retirement, you both have stated to me that you would like to retire at age 67. That would be in the year 2047, and you would like me to assume that you will be receiving Social Security. William, I'm using a figure in today's dollars of $29,820 for you. And Elizabeth, I'm using a Social Security estimate for today's dollars of $14,910. You've also let me know that when you retire, you want to receive an income of about 70% of William's pre-retirement income. So, what I've done there is take 70% of your income now, William, of the $170,000 salary that you currently make, and you've let me know that you expect that to increase at 3% per year, which is the rate of inflation. And so in addition to those calculations, I've also used an assumption that your investment return will yield 9% per year. All right, does all that sound good? Wonderful. So currently what you're saving into your 401k, William, is 10%, 7 of that being your contributions, and then your employer is matching 3%, total of 10% or $17,000. And I have taken your current salary and I have forecasted what that will be in future dollars, and I have assumed that you will both live to age 92 like we previously discussed as well. So based on my calculations, I show that you're actually pretty close to what you need to be saving, and the number that I show is that you should be saving at least $17,767. I know that's a very specific number, and one thing to remember is this is not a very specific calculation. What I mean by that is that even though we've used 9% rate of return for your investments for retirement, that figure, no one knows what the future return will be. Maybe you'll get that over the next 20 years, and then perhaps it will reduce as you approach retirement and you get a little more conservative with your investments and even into retirement. So this figure that I've calculated, we will want to look at every couple of years and just recalculate and reassess based on what's going on out there, and also as your asset allocation changes over time. Do you have any questions about that? All right. Great. So if you're currently saving 10% or $17,000, I recommend that you bump that up to about 10.5% to go from the $17,000 closer to $18,000. And this, I would say, from a cash flow standpoint, you should have no problem doing that. And in fact, if you want to increase your likelihood of retiring early, or take into account that you probably or may not get 9% investment return on your investments over that time frame, then I think it's a good idea for you to save even more, depending on what your cash flow situation would allow for. All right? Great. Now, another thing you asked me about retirement is for Elizabeth, and what type of retirement accounts might be appropriate for you having your own business as a sole proprietor with selling antiques. And one thing I want to highlight is that a traditional IRA or a Roth IRA would not work for you too, because you make too much adjusted gross income for that to be allowed. So what I would suggest you look into is a SEP IRA. I'm just going to quickly explain what a SEP IRA is. And what it is it's a tax advantage plan that is most commonly used for self-employed individuals like yourself. And it's commonly used because a SEP IRA is pretty simple and easy to adopt, which is definitely going to be a positive for you. And I'm going to go into the details, even though some of them may not apply to you. But the plan must cover all employees who are at least 21 years of age and have worked for 3 of the last 5 years, including part-time employees. And contributions must be made on behalf of any eligible employees who have been paid at least $550 for the tax year the contribution is made. The contribution limit is the lesser of 25% or $52,000. And there is a max of 25% of your compensation, and that's using a max of $260,000. I know you're not at that point yet, and I know you told me it's likely you'll hit $70,000 in income this year, but you never know what can happen and how successful this can be down the road. So I thought I would mention it. Also, the other employees, you don't have any other employees at this time, but I wanted to make sure that you knew the rules for that if you do decide to bring people on to help out with the business. So again, I wanted to reiterate that because of the ease of adoption and low operating expenses in establishing this SEP IRA, I think it is a good idea that you look into that. Once you get that SEP IRA open and you can kind of identify if you are on track to hit your $70,000 net income target, we can set up another meeting and discuss how much you should be contributing into that, how that works into your cash flow picture, and we can also discuss what that means for William's 401k contributions as well. But until that point in time, until that's opened up and we have that discussion, William, I suggest you go ahead and bump up your contributions to at least 10.5%. Sound good? If either of you have questions, please let me know, and we'll go ahead and move on to the next topic, estate planning, if you don't have any other questions about this.